Welcome to This Explainer. Today, we're diving straight into the Q1 2026 earnings and the long-term outlook of a seriously fascinating institution, Banco Latinoamericano de Comercio Exterior, but we're just going to call them Bladex. Think of them as literally the financial vascular system of Latin American trade. If you track emerging markets or global supply chains at all, you already know how absolutely critical they are. So let's unpack exactly how they're navigating today's wild economic landscape. To make sense of it all, here's our roadmap. Number 1, the Bank of LatAm model. Number 2, those record Q1 2026 results. Number 3, checking out their bulletproof balance sheet. And finally, number 4, their aggressive 2030 strategy. Let's get right into it. Section 1, the Bank of LatAm, financing regional economic integration. Let's look at who Bladex actually is. Now, their origin story is pretty wild. Bladex isn't just some run-of-the-mill commercial bank. They were actually set up back in 1979 by 23 different central banks from across Latin America and the Caribbean. Headquartered down in Panama, this multinational setup was built specifically to fuel foreign trade. They are essentially the vital bridge connecting LatAm corporations straight to global capital markets. And man, have they scaled this operation up. Operating across 25 different jurisdictions, they've grown their credit portfolio to an all-time high of over $13.4 billion. How? Well, by totally sticking to their lane. They focus strictly on high credit quality corporate and banking clients. There's no chasing risky retail debt here. They're funding the massive core infrastructure that literally keeps the region's economy humming. All right, Section 2, record Q1 2026 results. Firing on all cylinders. And honestly, firing on all cylinders might be a bit of an understatement. Listen to this. Bladex posted a record net profit of $56.4 million for the first quarter. That breaks down to an earnings per share of $1.31. It's a really solid 9% jump year over year. In a global macro environment that's been, let's face it, incredibly volatile lately, putting up nearly double-digit profit growth shows some serious resilience. But the real story here is the efficiency. They hit a massive 14.2% adjusted annualized return on equity. And even when you factor in a recent Tier 1 capital issuance, which is basically just a financial buffer they keep to stay rock solid and regulator-friendly, it's still a super high 13.5%. All of this profitability is fueled by disciplined growth and a massive surge in deposits, which hit over $7.3 billion. And if you're a shareholder, you're going to love this part. The board declared a very healthy quarterly cash dividend of about 68.75 cents a share. That's not just some token payout, right? It's a tangible cash-in-hand return driven directly by those record-breaking numbers. Glancing at the income statement, net interest income hit $70.2 million. That's an 8% bump. Now, yes, there was a tiny dip in their net interest margin down to 2.34%. Basically, the spread between what they earn and what they pay out tightened just a bit, mostly because of competitive market liquidity. But here's the absolute kicker. Their efficiency ratio dropped to an incredibly tight 26.5%. Remember, lower is better there. It means they're doing way more with way less. Okay, so with a $13.4 billion portfolio in Latin America, your mind probably jumps straight to concentration risk. Well, they've got that covered. The commercial portfolio is incredibly well diversified. Guatemala is their largest single country exposure, and it's capped at just 14%. Then you've got Brazil at 12%, Colombia at 12%, and Mexico at 11%. By putting strict caps on these regions, they make absolutely sure that a hiccup in one country doesn't derail the whole operation. Moving on to Section 3. Bulletproof balance sheet, mitigating risk. Because let's be real, great earnings mean absolutely nothing if the foundation is crumbling. I absolutely love this note from a recent Moody's local Panama review. They specifically pointed out Bladex's calidad de activos robusta, con deterioro de préstamos históricamente bajo. That roughly translates to robust asset quality with historically low loan impairment. It's a huge validation for how they underwrite. They aren't placing wild bets. They are methodically lending to the best of the best. And the broader rating agencies totally agree. That conservative mindset earned them top-tier local ratings, like a AAA from Moody's Panama. Plus, on the global stage, they're holding a really solid investment-grade BBB rating from Fitch. That investment-grade badge, that is their secret weapon. It lets them borrow money cheaply across the globe and then lend it out profitably back in LatAm. The proof is right there in the data. Non-performing loans are a microscopic 0.4% of total loans. Stage 3 impaired credits, just 0.3%. And here's another superpower. Their portfolio is structurally short duration. Roughly 2/3 of their loans mature in less than a year. That gives Bladex the amazing agility to just pivot and rotate their balance sheets super fast if the macro environment shifts. Finally, Section 4, the 2030 strategy, sustainable growth and higher returns. So with this rock-solid base, what's the game plan for the rest of the decade? Well, at the recent Investor Day, management laid out some really aggressive, yet highly disciplined targets. By 2030, they're aiming to push that commercial portfolio up to $18 to $20 billion, while hitting $125 million in non-interest income. And they want to do all of this while running a super tight ship, tightening that efficiency ratio to between 25 and 27%, and blasting adjusted ROE up to a massive 16 to 17%. And yeah, they plan to do all that while maintaining their Tier 1 capital ratio at 15 to 16% to keep that low-risk profile completely intact. As global supply chains are being completely rewired right now, trade dynamics in the Americas are shifting at lightning speed. Bladex has already proven they can generate high returns, protect a bulletproof balance sheet, and dish out consistent dividends. So it leaves us with one really compelling question. As the whole world races to secure Latin American resources and manufacturing, is Bladex's unique, central bank-backed model the ultimate, most bulletproof way to invest in the future of global trade? It is absolutely something to think about. Thanks for joining me on this explainer, and keep learning.